It's Thursday the 18th of July. I'm looking at the dollar index chart, which as you can see more recently, over the last year, has really only traded sideways. Let me just show you the last year. There you go, just to zoom in on that. That's very, very clear how we have been trading sideways. We've gone up a little bit since September, but it would have been almost impossible to run a long position. We've not had many consecutive days with blue bars, certainly not recently. So really holding a position for more than a couple of days is almost impossible, really, in this market. As I zoom in a little bit more, there we go. Let's just have a look at the last few months. Clearly, we're trading in even more of a sideways direction, so it's very hard to read. I can't see any particular pattern here, any particular trend, or anything that would make me want to run a position for more than a couple of days. Even the moving averages have really started to flatten out now. The 200-day moving average 100, the blue one. The 55-day, the purple, is more short term, so that's been moving a little bit more directionally. Offered some support here in April and May, but since then that's broken down and it really is having no effect on price whatsoever. So the dollar index really is very hard to read. It's erratic, directionless, and as I say, difficult to hold a position for more than a couple of days. There is more of a trend to follow on the Aussie dollar versus the US dollar. As you can see, it's been heading lower for at least a year and a half now, since the beginning of last year, but more recently we're seeing a bit more of a sideways trend. And if I zoom in just to the last two and a half months, you can see very clearly that we are in an extreme sideways trend. So again, not easy to run a position for more than a couple of days, although we did see a good, we saw a move down in June and then followed by a move straight back up again. So that does kind of emphasize the fact that we are in this sideways trend. So it really is a scalper's market only. Looking for trades that can maybe return 20-30 pips over a 1 or 2 day period. The short-term fibs are showing some support down at 69.95. We did get short around 70.20, 70.30 with a stop above 70.50. So that trade actually did work, offering a little bit of a return on the dip to 69.95. New Zealand dollar, I'm going to have to admit that I'm completely baffled with this one. I can't figure out what this chart is telling me. We are getting moves that will last up to a week in one direction, or at least we did through June, and even actually through July we are getting them. But to spot the turning points, I will have to admit it's quite difficult. There isn't actually any particular trend to follow. Although the Aussie dollar was in a negative trend, this really isn't in any trend whatsoever. We had that steep sell-off through April, May. Then we had the bounce, then we had the retest of the May low. So in theory you could call that a double bottom, but we haven't managed to break the peak of the double bottom, which would have given us a buy signal, or not definitively. You can see we rallied up and then collapsed again. So we seem to be trying to build some sort of bull trend. I guess in the very, very short term, the only way to look at this would be to put some trend lines on like this, and see if we maintain this channel which has been building over the past month and a half. I think that would be the only indicator that I have. It looks like this trend line down here is going to offer some decent support around 66.00, 65.95 with the 55-day moving average in there as well. I guess a break above 67.75, 67.80 would be a buy signal. Here's a chart of the dollar yen over the last 2.5 years. Good luck to you if you can spot a trend on this one, other than sideways. This really is about as erratic as it gets. Okay, more recently we have been in a slightly negative trend from April. We moved lower through the end of April, through May, through June, and have stabilized since. So right now I'd have to say we're moving sideways to consolidate those losses. I can't really put a lower trend line on there, but there you go. Yeah, we're just trading sideways. So what can I tell you? I'm looking at other time periods as I look over my shoulder, and there's really nothing to go on. I am managing to pick levels on this, and I did actually have us selling up here last week at around 108.80, 108.90 I think it was, and that worked quite well on the dip back to 107.80. You can see, I guess, in the very short term we've got some trendline support around 107.80, but I will be working hard later to give you some levels on this again. Euro yen is another one which is very much in a sideways pattern, as you can see over the past 3 months. If I open that out a little bit, you can see we spent about 4 months in a sideways pattern at the beginning of the year, and in the last 3 months in this sideways pattern. So again, I have to work hard to find intraday trading levels, or scalping levels. The Euro US dollar has been more difficult than many markets to predict, and I think that this chart shows you why. We don't have any particular direction, and you'd really struggle to hold a position for more than 2 or 3 days as we reverse backwards and forwards. Yeah, I'll update the report after this video, but you can see that it is difficult to find intraday scalping levels. Dollar versus Canadian, you know what I'm going to say, so I'm just going to open it up and show you the more recent downward move has been consolidating throughout July. We have this green 500-day moving average just below where the price action is at the moment at 129.90. So dollar Canadian finding some support there. There's also some support around the same area from the 500-week moving average, which kind of mathematically makes sense, of course. So that is key at the moment. We seem to be finding some support. I'm just looking at looking at the short-term charts. Then they're not really showing me anything. I think on the 4-hour chart, it looks like we need to get above 130.85, which ties in quite nicely with the midpoint of the Bollinger Band around 130.95. So look for 130.85.95 as your support, and look for 129.90, 129.80 as your resistance up here at 130.85.95, and your support down here at 129.90, 129.80. Now, one market that has been in a decent trend is the pound. The pound has been in a significant bear trend, certainly since March. I think we've ridden most of that bear move and remained short throughout, or at least selling into rallies as well. We've broken lower again this week. We got down to 123.80. This is a slightly bullish candle in conditions where we're just starting to get oversold. I wouldn't take this as a buy signal, but it could signal one of these little rebounds that we've seen from time to time. We've seen them in June. We saw them earlier in July. Not much of a rebound, I have to say, in May, although we got one at the end of April. So we could be about to see a little one of these rebounds. I wouldn't necessarily get long. I would wait for an opportunity to get short into the bear trend, just to allow us to unwind a little bit of this oversold situation. We're just getting a little bit oversold on the slow stochastic. Now, gold initially I thought would head lower. When we had these two spikes which created something of a double top, clearly sellers coming in around the 14.35, 38 area and pushing the price lower, I thought that signalled a top for gold, and I did actually think that we would turn lower. Well, I was right about the top. We certainly did top out, but after a couple of days, well, in the first week of July anyway, I realised that actually this is more of a sideways trend to consolidate the gains. So having changed my mind, we did actually trade sideways. Clearly, we'd have to get above 14.40 for a buy signal to negate these this little double top with the tweezers top, or these long upper wicks at least. But failing that, we have good support at 1400, 1397. If you're a gold subscriber, or even if you've been following me on Facebook and Twitter, you'll have seen me posting those levels. Yesterday that worked really, really well. 1400 was a terrific buy area. So happy with the gold reports so far. We'll just trade the sideways trend until we break. Silver has at last decided to play catch up with gold. Gold has been rallying for quite a while. Silver hasn't. Now then, we had a push up through here, which then managed to find some support. Well, just about got caught up with the moving averages as support, and then we pushed higher. Now we've broken quite a significant trend line. This trend line goes back to Q3 of last year. Now you can see that this trend line has been broken, well, yesterday. Not only that, but we got up through the green 500-day moving average. So this is a really significant buy signal. We've really got through some important levels. If we dip back to 1580, 1570, I would suggest using that as a buying opportunity. Get into maybe a longer term position in silver. You can have a stop below this peak, which is 1555. It's a really low risk strategy. It's a really low risk trade. And if silver does continue on, let's just have a look at the weekly chart. We could really get some significant moves to the upside. Here we go, the weekly chart. You can see it's breaking above that trend line I mentioned, and also the 500-week moving average, which is usually trading around the the 100-week moving average, which is usually trading around the 500-day moving average for obvious reasons. So this does look pretty good. I'm going to throw some fibs on here as well. Let's see if this gives us some targets and resistance areas. Okay, we're up through the 23.6% fib at 1556. I said we should have a stop just there on any longs. We could easily push up to 1625, 1630, which is the 200-week moving average. There's a little bit of trendline resistance around there as well, although by the time we get there, that resistance will probably be around the mid-$16 area. From there, we can get up to the 38.2% fib at 1662. So this does look pretty positive, at least in the short term. We're not particularly overbought on the weekly chart, so there certainly is some room there for us to move higher. We've got these little peaks now. If I can figure out where these are, 1618, 1621. Those are some peaks for this year. So that would certainly be a level to beat. And they come in roughly around the 200-day moving average. So we should be able to rally about another 30 cents, but we will run into a significant test around that area. Although the Forex markets seem to be trending sideways, the US stock markets certainly seem to be in a very clear bull trend. We've ridden that bull trend most of those moves. Right. The S&P has got quite a significant trend line going back to going back about 18 months. Now we topped exactly there. So we spotted that strong resistance at 30.24, 30.28. We topped exactly there and we turned around. Now I don't think this is necessarily the start of a bear trend. There's no particular sell pattern or sell signal, but there is a decent correction. Now this correction could go, let's just throw some fibs on here to give us some idea. Okay, I'd be surprised to see us down at 2900, 2850, but there is good support down there if we sank that low. We have some support at 2961. Where have we been to so far? 2880. So there is some support in the low 2960 area. Watch that at the moment. If we were to break below, what's this peak here? If we were to break below 2950, that could lead to some further downside, and we'll re-examine that. It could be quite helpful if I put a little trend line on here, just catching these peaks, so it gives us an indication of where the support is. Yeah, we'll review that if we test that level and see what happens at that level. Right, I'm going to get on with writing my reports. If you're not a subscriber and you would like the daily levels for your scalping in your FX or for trading the stock indices or gold or oil, then go to daytradeideas.co.uk. Thank you.